Please, everyone, join me in welcoming today's speakers, which I'll be introducing one by one. First off, we have Daisy StreatFeild. She's Program Director at the Institutional Investors Group on Climate Change, or IIGCC for short. At IIGCC, Daisy leads the Investors Practice Program, which supports members to better integrate climate risks and opportunities into their investment processes and decision-making. And Daisy joined the IIGCC in 2019 from the Inter-American Development Bank, where she was an advisor on sustainable infrastructure investment. Joining her on the panel is Wendy Cromwell, Vice Chair, Director of Sustainable Investment and Portfolio Manager at Wellington Management. As the Director of Sustainable Investment, Wendy is setting the research agenda and strategy for the Wellington Sustainable Investment Practice, including impact, climate, and long-term engagement strategies. And in her role as Vice Chair, Wendy is a senior member of the firm's management team and acts as an aide to the chairman and CEO with respect to external affairs. And last, but certainly not least, rounding out this expert group is Rohit Sipahimalani, Chief Investment Strategist at Temasek. Rohit joined Temasek back in 2008 as head of telecom and media and technology investments. And in 2012, he was appointed co-chief investment officer and has since held various executive roles before assuming his current position as of January 2020. So with that, Daisy, Wendy, Rohit, thank you again so much for joining us today. I'm excited to have you and to be able to talk to you today. And let's jump in, I would say. I have a couple of questions I want to start us off with, and then want to make sure that we can turn it over to our audience. But let me start with Daisy, given the IIGCC's role in the market and the bird's eye view that you offer. So in your role and perspective as Europe's membership body for the investor collaboration on climate change, how do you see investors approaching the path towards net zero today? And maybe you can also elaborate a bit more on what the major trends, challenges, and opportunities are that one should be aware of. So over to you, Daisy.
Thank you very much, Claude, and really great to be here with such a diverse audience. And yes, I mean, great questions to start us off in terms of the path towards net zero. And I think one of the things I would reflect on in terms of the trends, and certainly for European investors and increasingly from other parts of the world, is just the appetite around the challenge and opportunity that is reaching net zero global emissions by 2050. And I think it reminded me when you mentioned my bio about integrating climate risks and opportunities, how quickly, even within my role at IIGCC in the last 2 years, we have moved from investors starting to think about kind of climate as a risk and managing that, to actually such a large number of investors thinking about how they can play a role in driving that transition to net zero by 2050. And really, I would say the major trend when you ask that question is just the appetite we've seen around investors thinking of themselves as key drivers in that transition and what they can do to reach net zero. I think obviously alongside that, one of the things that is driving some of that, and certainly in Europe, is around the regulation we see towards that, both in terms of kind of governments and increasingly around the world. It's really encouraging to see what's happening in the US at the moment on policy and regulation in line with net zero, and that is also driving the sense that this transition is happening, it's coming. And so investors being part of that and thinking about how their portfolios look in that transition is really important, both from managing that kind of change in regulatory direction, and certainly that's been coming through in Europe for some time, including regulations on investors themselves. And so I think there is also a sense that investors want to be at the forefront of defining what that transition to net zero should look like, how that should be managed from a fiduciary's point of view, and really developing the kind of standards and thinking around that. And I think within that, the need for investors to sort of think very carefully and have a sort of set of established best practices and standards is driven by some of the challenges that we see in net zero. And a lot of that is to do with understanding what does net zero mean? what should you be measuring to understand if you are aligning to that net zero pathway and decarbonisation we need. And that's really why IIGCC a couple of years ago, when net zero was still talked about in sort of small corners, we established the Paris Aligned Investment Initiative to work with our members in Europe to look at what it means to be a net zero investor or aligned to the goals of the Paris Agreement, what you need to measure, how you set targets to achieve that for a portfolio, and the kind of actions that you can take to really be driving that transition in a way that delivers impact in the real economy. I think there are a huge number of levers that investors have to influence that transition, both in the way they manage their portfolios and investments, but also in the broader actions they can take on policy advocacy, on corporate engagement, etc. And we wanted to really identify what were the actions that investors should be taking more broadly, using all of those levers to really help drive that transition and overcome some of those challenges, because I think that sort of need for a common set of standards that everyone understands is really important, as well as the real power that investors have while they will need to take decisions individually as fiduciaries and look at their own portfolios. Actually, there's a huge power to investors having a common voice, whether that's what they're asking of companies in terms of that net zero transition and holding them to account on a similar basis for that, or what they're asking of government. So I think having that sort of coalescing around a common definition of what we mean, what kind of actions really drive that transition to net zero effectively, and what has impact in the real economy, and then being able to take action on a credible basis with the data you need is really important. And with that, I think you mentioned the sort of challenges that investors face. I think I'd point out two, one of which is, we've only been on this journey for a relatively short time in terms of thinking about what net zero means. And there are definitely some leaps of faith that investors have to take. One of which is around, the world is not on a trajectory towards net zero. And therefore, we do need to see that policy change if investors are going to continue to meet their goals and targets in decarbonisation. And we also don't have kind of all of the knowledge, the data to cover all parts of an investor's portfolio. We haven't worked out yet what it means to align a derivative to net zero, for example. So investors kind of making commitments is really important in setting direction to net zero, but we are slightly building the plane while we're flying. And that's really where IIGCC has seen their role to bring about kind of convening investors really to come to solutions, identify the solutions so we can develop those best practice sort of ways of working and implementing net zero strategies across full portfolios, and also making sure that those we also need to shift, companies and policymakers are doing so. And I think the final challenge I would note, I'm sure it'll come up several times in this conversation, is around data. Ultimately, you can't manage what you don't measure or what you aren't able to measure, and we don't see sufficient disclosure around all the indicators we need to know if assets are aligning to net zero, their carbon footprint, both now and going forward. And so there's a lot of work that needs to happen to improve those disclosures so that investors really know what it is they're managing and how to drive that transition to net zero. And we can then also see and hold investors accountable for the targets they're setting. So there are gaps we're trying to fill, but I think the overall trend, I would say, and the opportunity is really that net zero is here. Policy is telling us it's coming, and investors are really stepping up to be part of that transition, and it's great to see.
Thank you so much, Daisy. You already covered a lot of ground, and it was great to hear from your perspective, sort of the lay of the land, and not just challenges, but I hear a lot of opportunities. And with that, I'd like to turn it over to Wendy and make sure that we invite the next perspective, the one of an investment manager, to the discussion. So Wendy, again, welcome. To start us off from your side, would you mind telling us a little bit more about Wellington and more specifically your firm's net zero commitment and how you help your institutional clients to transition their portfolios to net zero?
Yes, thank you, Claude. Wellington is a large global asset manager. We manage 1.3 trillion in AUM on behalf of clients across the globe. So we have over 2,000 clients in more than 60 countries. We are based in the US. We have 16 global offices, but I mentioned that US based because I think it can inform some of the role that we intend to play in terms of the Net Zero Asset Managers Initiative. We were one of the founding members back in the fourth quarter of last year of the Net Zero Asset Managers Initiative. And I serve on the advisory panel and have frequent interactions with Daisy and others from the IIGCC. And we're so pleased to have them convening us all. From a Wellington perspective, back in 2018, we did something that was pivotal and foundational to our ability to make this commitment in 2020, which was we launched a physical climate risk research collaboration with an organization known as Woodwell Climate Research Center. And the goal of that collaboration was to bridge the gap between climate science and finance. And I sometimes tell the story about when we sat down with the head of Woodwell. We said to him, it's a guy named Phil Duffy, he's brilliant, but we said to him, Phil, we really want to understand in basis points the impact of heat, drought, wildfire, hurricanes, floods, access to water issues, air quality, rising sea levels. And he looked back at us with enthusiasm and said, what's a basis point? And I always tell that story because I think it just brings to life that there is an analytical rigor to climate science. And the scientists actually have done a really good job of projecting what's going to happen, where and when, but they don't know basis points or economies or capital markets. And then investors, hopefully we know economies and capital markets, but we don't know the climate science or the RCP scenarios. And so back in 2018, we were still hearing from investors and clients, climate change is too far away to matter. It's not in my investable time horizon. To really tackle that, you can do a research collaboration and understand that that's actually not true, that these physical risks are here, they're evident in everyday life, and then they will increase in intensity and severity and frequency. And once you have that grounded into your organization with your investors working side by side with the climate scientist, then you have a deeper and more developed conviction over the transition, that it's necessary, that it will only go one way, it won't retreat because of a change in administration, and that it will probably happen faster than people are predicting. And so that compels you to be part of an initiative such as this one, banding together with a group of now 87 asset managers to really make progress to ensure that companies have a plan for the transition, are transitioning, because as we know, companies form the basis of an economy, economies form the basis of society, and we all need to adapt and transition to avoid the systemic risk.
Thank you so much for this perspective, and really appreciated you sharing this personal story. I feel like the necessity for translation within the industry and then across sectors is definitely something that needs to be elevated, and your story just made that even more obvious. Wonderful. So closing the round of opening questions, this brings me over to Rohit, and I think that's yet another valuable perspective that we have on this panel, which I'm excited to hear from. So Rohit, also welcome again to you, and could you please briefly introduce Temasek and to our audience and explain your rationale for a net zero portfolio strategy and how this fits with your mandate as a sovereign wealth fund? Because I feel like in a lot of panels, we don't get the opportunity to listen to a sovereign wealth fund. So excited to hear your perspective.
Hi, thanks, Claude. Really lovely to be here today with this audience. So Temasek, just to introduce ourselves first, is we are an investment company owned by the government of Singapore. We don't like calling ourselves a sovereign wealth fund because A, we're not a fund. Secondly, we don't manage the country's reserves. But we actually organize as a corporate entity which owns its own assets and then manages them. So we have assets worth over $200 billion, and that's a lot of it is concentrated positions, controlling stakes in a telecom company, in an airline, in a utility, in a port. And then we have a lot of growth equity investments, minority stakes in businesses all around the world, completely equity focused. So, we have three parts to our mandate, our charter, which is really do well, do right, do good. And doing well is really about having sustainable returns over the long term. But we want to do so in a way which also is contributing to the communities we operate in. And really, we see ourselves as catalytic capital to find solutions to issues around us. So in that sense, when you look at a net zero commitment, it's a natural thing because A, it's the right thing to do, it's good for the world, but also it's completely consistent with us wanting to have long-term sustainable returns. Because if you believe in the inevitability of moving to a lower carbon world, the inevitability of policy actions moving in that direction, it's inevitable that carbon is going to be priced appropriately, and we need to factor that in as we think about our portfolio and returns out there. So we made a net zero commitment in 2050. I would say in the intermediate, we've made an aggressive commitment to reduce our portfolio emissions, the emissions of our portfolio companies, by 50% from 2010 levels by 2030. And that effectively means reducing it by almost 2/3 from where it is today. Now, how do we do that? We obviously have to engage, since a lot of the companies we own are large stakes, which means companies we own for decades. So we can't just sell off things that we don't like. We've got to work with these companies to work towards that transition. And I'm happy to say that most of our major companies now have started disclosing their carbon footprint. But more importantly, have also articulated their path of what their targets are over the next decade. And that is largely consistent with our own goals. So that's one. Secondly, in terms of making new investments, what we do is that we've imposed a notional carbon charge. So we price carbon internally at $42 per ton of CO2. And for every new investment that comes to committee, our teams have to apply that charge to the carbon emissions of that company. And based on that, they have to target an incremental hurdle rate from what they would normally have been required to do. Now, it's a pretty blunt instrument, but I think what it has done is create a lot of awareness throughout the organization amongst the investment teams about the importance of focusing on this issue. And I think that's why it's made a big difference. We're now modifying that to make it more nuanced, but the awareness has been created. Now, this is all around managing the risk around carbon. As you all have said, a big issue is the opportunity around investments, and we're increasingly focused on that. So we're actively investing in, I would say, a lot of early stage investments around decarbonization technologies. So it includes things like investing in plant-based proteins, companies like Impossible Foods, Perfect Day, investing in carbon capture and storage solutions, companies like Swante. We're also looking at directly investing in natural climate solutions. So the whole lot of areas, very excited. We're looking to increase the amount of investments we make in this space of what we call the sustainable living space, increase that by 10x between 20 and 2025. So overall, I would say, look, we try and embed sustainability into everything we do. Climate sustainability is an important part of that. But I would say, having started this journey more from a risk framework, I think increasingly, like a lot of people out here, we're very excited about the investment opportunities, and that's a major focus for us as an institution.
Thank you very much, Rohit, and it was great to hear sort of the transition you went through and touching on the actual examples. And I think this is where we should take our conversation next. But before we jump into the next round of questions, I would like to once again invite the audience to send any questions that you may have for Wendy, Daisy, and Rohit to our questions lead via the Zoom chat. As we're going to enter the Q&A part of the panel now. So your audience, the conversation is what you want to make it. And let me quickly see what kind of questions we already have received. And I can see some coming in. So the first one I would like to pick up to follow up now for the second half of the discussion. I'm going to go back to Daisy here, would be back in March, the IIGCC published the Net Zero Investment Framework, which provides a common set of recommended actions, metrics, and methodologies for investors. Could you elaborate for our audience what makes this framework such a valuable tool, and how does it cater to the different investor types? Because I do believe that we have quite a wide array of folks on the call here today, and how they can make use of that.
Yeah, thanks. And very happy to talk about the Net Zero Investment Framework, which was really the product of that 2 years of work I mentioned with our members through the Paris Line Investment Initiative, and an aim to set out those common recommended actions that we thought were important for all investors to be taking to be considered as sort of Paris aligned, as it were, and optimal metrics and methodologies for measuring the alignment of both your portfolio at the kind of portfolio level, but also the assets within the portfolio. So, and also kind of doing the job of looking across everything that was available kind of in the market in those terms of those sort of methodologies and metrics, to say what do we think is the most optimal, using a set of principles that we felt helped make sure this would apply to all investors effectively. So these principles were around impact. Is it going to kind of drive the real world transition that we need? Is it sort of science-based? Is it rigorous? So is it in line with the kind of net zero pathways and the best available science that we have on that? Is it practical for investors to use? Is it accessible? So using available data sets, etc., that are publicly available. And does it help accountability? We need sort of transparency in these kind of metrics and actions that investors are using. So through that, and working with quite a broad range of both asset owners, asset managers within our membership, we feel we've sort of arrived at a set of recommendations that can sort of apply across the investment industry. And certainly we've already seen a huge amount of uptake, and many of our members and beyond using it. And indeed, when we launched the framework, actually our Paris Line Investment Initiative became a global collaboration with a number of the other regional network series in North America, for example, the Asian and Australian investor groups as well. And also we see those who are now making net zero commitments through our Paris Line asset owners or the Net Zero Asset Managers Initiative, also I think finding the framework a useful sort of starting point for setting out their actions to implement those commitments and setting their targets and goals. And it really tried to be a comprehensive set of those actions and metrics, both from the point of view of kind of governance, what do you need to have in place there, through processes like strategic asset allocation for asset owners, down to how do you measure the alignment of assets within your listed equity portfolio, both on that sort of current basis of current performance, but also that forward-looking basis. Because I think it's really important to note that it's really not an issue of where investors start now and what's in their portfolio now. It's how they're managing that portfolio and the assets within them and the transition going forward. So that kind of sense of what are the forward-looking metrics that we can use to ensure we are seeing that transition and managing portfolios in that way. And then there are suggested actions on things like that you can do in terms of portfolio construction, best practice stewardship and engagement that drive the transition. And all of these are designed to apply both to asset owners, asset managers, and we reflect some of the differences within the framework and large and small. And we also tested the framework using some of our members' portfolios. So we think it really works. People are using it. So we hope it's useful and provides that sort of set of best practices that investors can have at their disposal and use.
Great, thank you so much, Daisy. And maybe just a very simple follow-up. How can investors get a hold of the framework?
Well, I will put a link to it in the chat, because that seems to be the easiest way to get a hold of it. It's available on our websites. Yeah, we'd be happy to, if people want to follow up, but it's there in the chat now. And yeah, as I say, it's also there to be sort of modular if investors or part of an investor is sort of looking at their real estate portfolio, for example. It has a module on that and net zero in that context. So it's really there to hopefully be a toolkit that help investors, even if they're just getting started with where they can go from here. And then obviously we encourage those that are ready to kind of make the full net zero commitment, which involves kind of setting those long-term goals, interim targets, and a set of actions around that.
Wonderful. Thank you so much, Daisy. And I see the link is already in there. So folks, please make use of that. Before I jump into the next question, I would also encourage the panelists to react to each other's remarks. So feel free to follow up with any questions. It's also an opportunity for you to pick each other's brains. Thinking about,
but I could jump in. I could jump in, and I would say one of the motivating drivers behind our commitment to the Net Zero Asset Managers Initiative was to be part of the group that was working on the methodologies that are going to help us all make this transition. And so a woman that I work with, Julie DeLongchamp, is one of the co-chair people for the top-down target setting group, which Daisy is also an active participant in. And it's great what the IIGCC and other members of the investor agenda are doing, because they're bringing together asset owners and asset managers from different geographies and regulated entities, and focusing on the pragmatic ways that we can get things done in concert with one another. I think we've already seen progress in terms of establishing accountability metrics across asset owners and asset managers, and that you get a different perspective with all of those bodies involved at the same time than you would with any one person trying to go alone.
Thank you, Wendy. And Wendy, for you, I was wondering if you wanted to just dive a little bit deeper in terms of Wellington's clients include a wide array of institutional asset owners, as you've already shared. Would you mind letting the audience and your fellow panelists know maybe one or two examples of how net zero tools and solutions are being provided to your clients today?
Sure thing. In terms of our business, Wellington's business, about 90% of our AUM is managed either in separate accounts for large institutions, or we serve as a sub-advisor for a large mutual fund company. So very few of our assets are actually assets for which we have determinative control, where we can say, this is what we're going to do and go forward. We have 10% in sponsored funds, roughly split evenly between US and non-US domiciled funds. So for us, the key to us being successful with the net zero commitment is working with our clients on their decarbonization goals. So a big piece of what we've done in terms of making the commitment is generated a lot of interest and consultation from us to our clients on what that looks like, the various pathways, how we can be implementing in their portfolios, why we think it makes sense from a financial perspective and from a systemic risk perspective, and working on actual bottom-up plans for execution. When we made the commitment, we had 25 clients out of our 2,000 who had made a similar commitment either by 2050 or sooner. And now we're up to 75 of our clients covering about 520 billion in AUM that have made the commitment, which is the first step. And now we're working on the execution of that commitment within each of the asset classes in which they invest. Primary to one of our primary tools in the early years of our commitment is engagement with the universe of securities that we own for those companies or issuers to set science-based targets. And that is because we recognize that even if we could decarbonize our portfolios by selling securities, but it wouldn't insulate them from climate risk because those emissions would still exist and they would come back to harm our portfolios and the assets that we manage on behalf of clients in the form of physical climate risk. So it all fits together, that early learning on physical climate risk, the necessity for the transition, and our approach to how to address it. And so we've been working with each of our portfolio managers on the engagement plan for those companies. And so far today, you may already know this, about 1,400 companies have made or committed to making science-based targets. Given our size and the active management nature of our organization and our reach in terms of our research, we think we can accelerate that. And we think that we can accelerate the measurement of that by getting data providers to, like MSCI, for example, to include it in their data sets, which will help others push on these same issues as well.
Thank you, Wendy. Very practical insights. Very much appreciated. Sticking with sort of the practical on-the-ground work, let me turn it over to Rohit. And probably a lot of the folks online today have come across this news, but what I want to touch on is back in early April this year, Temasek announced that it has agreed to establish a partnership with BlackRock called Decarbonization Partners, which focuses on advancing decarbonization solutions to accelerate global efforts to achieve the net zero economy by 2050. Rohit, would you mind telling us a bit more about the target investments in terms of their stage, sector, technologies that you're working on in this new partnership?
Okay, so just for context, we do a lot of investing around this space, but we've got a group within Temasek that what we call it's a strategic development team, which actually looks at early stage breakthrough technologies in decarbonization. And we're investing in areas which really are not yet commercialized, but so, TRL 6, 7 and earlier. At the same time, we have a group that looks at larger investments in more mature companies that are focused on this space. But there was a gap in between, which was between, I would say, these non-commercialized technologies and these very mature companies, what I would call early growth. So it's not VC, but late VC, early growth. That was an area which we weren't targeting enough, and we wanted to do more out there. BlackRock also has had a lot of interest in terms of focusing in this area. And so together we thought it would be useful to set up a venture that focuses in areas such as, it's next generation renewables, mobility, built environment, things like that. But really the early growth stage companies where you have commercial technologies that have been proven, but have yet to be sort of scaled. And I think that was a segment we felt that we could get together and do something on. So that's really going to be the focus of this venture. And we're very excited about that.
Great, thanks for sharing. And Rohit, just came across a very interesting follow-up question from the audience, and I think you're in an interesting spot to answer, if I may. So the audience, or one participant out of the audience would like to hear your thoughts on to what degree must business and government cooperate to make net zero a reality? How do you personally see the relationship playing out over the coming years? And I'm inviting your fellow panelists to weigh in on that afterwards as well, because I think that's a very interesting intersection that must be addressed.
Yeah, look, I mean, it's clear that governments have to play an active role, because you need policy to be there that drives this decarbonization agenda. I mean, yes, because I mentioned, if we have to move towards a path of lower carbon world, people need to realize the price of carbon, and you need to have regulation that forces companies to move in that direction. There will be societal pressures that cause companies to do it. So customers demand it, employees demand it. But till you really put a proper price of carbon or have sort of regulation that drives this agenda, I think we're not going to get to where we need to. So clearly government policy is going to be very critical out here.
Claude, I'd add just an offshoot to that. I agree exactly with what's already been said. In addition, one of the areas that we've been focused on is working with the SEC, who's called for input into what mandatory disclosures for issuers should look like. We've been very active in that conversation because, as Daisy mentioned before, we do need more data. Investors are right now making investment decisions often based on estimated data. We're encouraging the SEC to encourage companies to really share their own scope 1, scope 2, scope 3, and locational data so that investors can make decisions based on actual information and can work with companies in consultation on their own decarbonization pathways or transition plans. I think it'll be a much more productive environment if that data is actual from the company than estimated and perhaps inaccurate.
I would completely agree with Wendy in terms of, there's an extent to which some things just require regulation to, a lot of companies are disclosing their scope 1 and 2, 3 emissions, but many aren't. And so there are places where we need that sort of regulation to really make these things happen. I would also say, just to Rohit's point, in terms of the overall kind of policy environment and providing the right kind of incentives, regulation for the transition, there are certain places where it's just going to be necessary for there to be a change in carbon pricing, for example, to make things economic to invest in. I mean, and a lot of our investors, they say, okay, I understand how I'll do net zero and reduce my emissions, maybe even by the 50% by 2030 that we need. But once you get into the 2040 or 2050 point of actual sort of net zero, particularly if you're a universal investor, you're expecting to have a diversified portfolio, unless the world shifts and there are more assets that are economic in that context, that there simply won't be the universal investment. So it needs to be a sort of virtuous circle between investors allocating capital in a way that drives the transition, invests in those solutions, helps bring down those technology costs. But there are some things that regulation will need to do and policy will need to do to drive that transition. And just to give one example, when we were looking at the different asset classes, we looked at using the CREM tool, the Carbon Risk Real Estate Monitor, for measuring the alignment of real estate assets. And modeling a portfolio, once you get to the energy use and emissions reduction from those buildings that you would need in the 2040s and 2050s, there isn't really a way to have anything that looks like a current sort of scope of a portfolio in real estate, because there would just be so few assets that would meet those requirements now without a change in the kind of regulation, whether that's building codes, carbon pricing, or whatever. So we know what is needed from policy. Investors can go a long way already down that pathway towards net zero, but definitely it has to be a mutual effort between policymakers, companies, and investors.
Thank you, Daisy. And these policy and regulation questions on panels are usually a slippery slope. So I appreciate all three of you weighing in. I think that's very valuable and will be greatly appreciated by the audience as well. Let me come back to one of the challenges that Daisy touched on at the beginning, data. And this is an issue that was brought up by the audience as well. So maybe again, a question, and any of you are happy to hear your thoughts. The question was, assuming you need operational data from the investees to accurately calculate emissions of your portfolio, how do you do this for smaller and medium-sized enterprises with little to no experience in estimating their emissions? So how do you approach that right now?
So maybe I can just take a crack at it. You know, we found so the two parts. One is obviously we do invest in a lot of larger companies, and if they're public, you know, they're pretty much now required to disclose. If they're private, actually with a lot of our portfolio companies, we've actually engaged with them and told them that, look, we need them to disclose this data. We've laid out sort of what our carbon ambitions are, and if you're going to remain a shareholder of this company, they have to be on the same journey as us. So it's easy to do that. Now, when you come to the smaller companies, I guess it takes time, but I think a lot of them also are beginning to appreciate that a lot of our companies do have ambitions to become bigger and become public companies. And they're beginning to appreciate the benefits of, in terms of actually getting together the data, realizing it's going to take time. So we've got teams that are helping them do that, you know, use external vendors also to sort of help them do that. But clearly, it's something we're having many, many more dialogues with our companies, and we're finding these companies being more receptive. So yes, it seems complex, seems difficult, but actually, particularly because sometimes they are actually small, it's not that difficult to get started on that journey. And you know, you just have to push them to do it. And I think they're realizing the benefits of doing that too.
Wendy.
You know, Claude, in terms of investment opportunity, we're seeing more companies who provide this type of service come to market to provide emissions estimations and emissions tracking for private companies or small to medium enterprises. So there's a business opportunity there to serve this unmet need as well, particularly as more asset owners and asset managers are demanding the data, then it creates that, you know, that need and that opportunity.
Daisy, anything you wanted to add?
I mean, I think it's being covered very well. I think there's an interesting question because actually what we see is for the highest impact sectors and the high impact companies, they tend to already, you know, because they're the area of focus, be providing that kind of data. So I think often you see actually quite a large proportion in terms of total emissions, or where the greatest intensity of emissions within a portfolio, there is actually data available. It's much more challenging with small cap, mid cap, you know, private markets. But I think even in the private market space, we have a working group on private equity, and actually the sort of the difference and the opportunity there is actually often you have majority stakeholders within that. So whoever is the majority owner of that company has extreme influence on that company to be able to get them to provide that data. And yes, they will be starting from scratch. That's going to take a bit of time, a bit of capability building. But as Wendy mentioned, there are more and more of the sort of service providers can do that. I mean, it is true this doesn't come for free, and so there is a cost to that. But I think when you look at the potential changes to valuation, when you look at transition risk, I think it's probably a worthwhile investment to be understanding the carbon risk in your portfolio. So I would say worth the money, even though yes, for some the data isn't available, and that will take working with a service provider or a data provider to work with those estimations or the actual reporting to get that for kind of smaller companies. But I think we see that already happening, and there are opportunities for investors to influence that even where that doesn't exist already.
And I would just add to something what Wendy said. We already are seeing, just in the last 12 months, the amount of data that is available from third-party sources for us to be able to get a better picture of our portfolio has significantly increased. The quality of the data, the availability of the data. So it is, the whole industry is moving in the right direction out there.
Thank you. And I'm just quickly checking time, and I got the heads up from my colleagues. So we have about 5 minutes left. We're not going to get to all of the questions. What I'm probably going to do is send them through to you to have a look at them, because there were some, we could go on for another hour and a half at least. But with the remaining 5 minutes, before we get everybody back into the main room, what I wanted to do is sort of go full circle and maybe use the opportunity that while we have the three of you to do sort of a rapid fire round to close us off. And if you could share in a couple of sentences, each of you, one or two practical things from your perspective that you would advise fellow asset owners, fellow asset managers to do in order to succeed on the net zero path. So use it as a call to action. Let me start with Rohit, and then we'll go over to Wendy, and we'll close out with Daisy.
Well, I think Daisy mentioned right at the beginning, you've got to measure stuff, right? So you got to know what your baseline is and what path you're on. And then two practical suggestions: if you want to get to where you want to get to, set budgets for your teams. As an asset owner, set your investment budget, carbon budget, just like you have a capital allocation budget, you have a carbon budget. And then secondly, link compensation to achieving the budget. So I think two practical suggestions. I think if you do that, you can go a long way.
Thank you, Rohit. Wendy.
Sure, I'll jump in. I encourage everybody to get started. Whenever anyone considers a commitment such as this one, they can think of all of the objections and the complications with implementing it within their business. That's true for everyone. And they may be different across different organizations, but everyone has those same challenges. So I encourage you to uncover the objections in your organization and think about tackling each one of them one by one. For us, it was that 90% of the assets that we manage were actually other people's decision to make. So you incorporate a strategy that allows you to work in partnership with those clients to help them get to this objective as well. Asset managers and asset owners and investors are inherently analytical people. Do some spreadsheet work, understand where you are, understand which funds are in which position, understand the presumed paths or hypothetical paths that you could use to get there. Right size the problem. Instead of saying, oh, we don't have methodology for this or this, understand how big that is in the context of your full AUM. Run some focus groups. We ran focus groups with investors, sector investors. And one of my favorite quotes was from our consumer lead. And he said, this is like throwing a sailboat into the ocean and the wind's only blowing one way, because all of the good high quality companies that he's looking at already are considering science-based targets, and they're asking their suppliers to consider science-based targets. And so he sees the organic orientation and what we could do to enhance that. And then last but not least, get data. If you're an asset manager, get data into your investor tools. The typical investor tools, their trading tools, allow them to have this data alongside the traditional financial data they already have in order to get that implementation going.
Thank you, Wendy. Daisy.
Yeah, I would concur with a lot of that, and very briefly, absolutely agree, Rohit. The processes and incentives within the organization and making sure they are embedded across the organization. I think net zero, when it comes to investment, ultimately will end up being a whole of asset manager or a whole of asset owner effort. And so making sure you have the engagement of the organization and the processes and incentives in place that drive that, really important. And I think, yeah, absolutely getting hold of that data, collecting that data, but also I think really thinking, while we encourage a comprehensive approach and doing things across your portfolio, you know, carbon is a great thing because you can see where most of it sits within your portfolio, usually, even if it's just a sniff test on, you know, what are your fossil fuel companies. And then you can think about where you have most influence. Where are your largest holdings? Which of your companies is most likely to listen to you as an investor, or where you can work with a few other investors to make a change, and really prioritizing where you will have most influence. So what are your levers to have that influence? And for many asset owners, that might just be your asset manager selection, honestly, and getting the right asset manager who can do this for you. So thinking about the levers you have as an investor and working with those that are going to have most influence, I think is key.
Thank you, Daisy. And yes, thank you to the three of you for these concise concluding remarks. I think that perfectly tied a bow on it. Unfortunately, we're already out of time. As I promised, time's going to fly by. So together with the audience, I would like to thank the three of you, Daisy, Wendy, and Rohit, for sharing your valuable practitioner insights with us today. It was riveting to learn how your organizations approach the net zero challenge. I was going to say next normal, and how you are doing your part in shaping the next normal. Now I have it. Next normal now is the process happening right now. You're contributing to it, and it's a collective process in which we reimagine capitalism and explore the ways that money can tackle our biggest global challenges, like climate change and inequality. I also wanted to thank our audience for joining this session today and contributing such meaningful and important questions. Terribly sorry we couldn't get to all of them. There will be more opportunity in the future, I can promise you that. And we're now going to invite you to join the virtual fireside chats with Cardinal Turkson and Jose Minaya. These are two renowned thought leaders that are about to share their ideas and wisdom with all of you. So don't miss it. You may use your unique access link provided to you in your registration confirmation email to go back to the main session. And our tech lead, Ben, I believe, will share the info if you don't have it handy in the chat box as well. And with that, I'm closing this breakout panel. Thank you again for joining us today. Have a wonderful day and be safe.